India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. It is T+1, Trump +1. The big market reaction has come through overnight, and of course, we'll track the implications of it here for the market, which has done well. Last two sessions, it's bounced very nicely off the lows. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good morning.
Hi, morning, Nigel. Morning, Prashant. And I think that's the question, right, that people have on their mind, that whether this Trump trade has lifted India out of its funk. I mean, we've been kind of struggling along. So whether that was the first sweet reaction, so to speak, or whether this is the start of something new and whether these trends will continue.
Well, Trump will be good for the United States economy, and in fact, the market's out there. But what about the rest? You don't know what he's going to do next. So we're getting used to the T+1 and T for the next 5 years. So let's see how it goes.
America first is the ethos.
Yeah, absolutely.
Right?
And that's a bit of a risk as well.
There is a bit of a risk. But, so that's the thing, right? I think markets now become extremely sensitive to any policy. They're not in the White House. They're not taking power. That's only going to happen on the 20th of January. But you will get indications, right? They will talk, and I think markets will react. So I think we should be very sensitive to all of that.
Indeed. Trump is going to do that step, and U.S. economy is going to rock. But will the rest be dancing with him as well?
I must say that one of our young producers yesterday said that, okay, this just means more anxiety and more work for us. I said, why? Because he'll announce something in the night, he'll tweet something, and then we'll have to react to it and get ready, with the analysis first thing in the morning. I won't name who, but I think that's a very fair point.
But apparently he never sleeps. So it's burgers and Coke.
At least, Prashant's son as well, at least has gone to school today because Let's get to the action.
All right, well, let's quickly run you through what you need to know as we begin this session. You got, I'm calling it all aboard the Trump train. And I think that's, when I say all, I mean markets, right? Overnight, you look at equities, you look at yields, you get the dollar. Basically, you got a glimpse of it because all of this was happening through futures in the Asian trade. Because by about 9:30, 10, 10:30, 11, it was all clear. Russell futures, which had started to trade, were up about 6.5%. Dow futures were up sharply. Dollar was up 1.5%. So it's all materialized. It's all been realized in that sense. So those are changes up on your screen. S&P about 2.5% higher. It's the single biggest one-day jump since 2022. Nasdaq 3%, Russell 6%. You look at the Russell 2000 and that 6% jump. So there are two things. One, many were talking about the Russell and the small cap, mid cap part of the US market being like a cheap call option on a potential Trump victory. That is the part of the market which trades very cheap compared to the Magnificent Seven, which has driven the bulk of 60-70% of the US market rally has been driven by just about 10 stocks. Let's round it off. Whereas the 2000 bottom stocks have not done well, and that is the one which did extremely well. The other point is, you may think, well, this is a junk rally. Well, no, it's not. Actually, if you look at the S&P 600 group of companies, that's an index where there is a profitability criteria. Many of those stocks are part of the Russell 2000. That also did very well. Actually, that outperformed what the Russell 2000 did. So it was not a sort of, junk rally, so as to speak. That 6% very much on the table. Massive jump on US yields. The 10-year yield, 16 basis points higher. Now, that is, a couple of standard deviation moves. 4.43% on the 10-year yield. I think for the US market, what becomes important, yield levels matter. Equities cannot rally like this if the yield goes to, say, it goes up another 40, 50 basis points and you're at 5%, right? That's not going to happen. So, last night, of course, because it was like a synchronized kind of trade, everything went up, but yield levels matter. Last night, it got ignored, but I don't think it's going to happen for very much longer. Dollar index, 1.6% higher. We are past the 105 levels as well here. All right. There's one more thing, though, which can extend all of this a bit more. Remember, it's still not a sweep. It looks like a sweep. Trump is president. They've got the Senate. the Congress is made up of the Senate and the House of Representatives. They got the Senate, but the House race, the votes are still being counted. And we may not know that over the next couple of days. It's looking like the Republicans will take that as well. If that happens, and when that confirmation comes, I think you will see one leg higher on things like the dollar yields, etc. As I said, markets will remain very sensitive to any comments from Trump from the Trump camp on tariffs, and this may happen, starting now all the way till he actually takes power early January. Tonight, and this has taken a bit of a backseat, you got the FOMC, and a 25 basis point cut is the consensus call. Guidance should be interesting because, you've got the elections just finished, so I don't think markets are expecting very much by way of guidance coming through from the FOMC. Now, let's talk about just one more thing. China's NPC is underway. It finishes tomorrow. That is the National People's Congress. And if you remember, the talk was that if Trump were to sort of come to power, China will be ready with a fiscal stimulus, a bazooka, just to protect its interests. We've not seen that yet. Will we see that between today and tomorrow, I think, is a question. Or will they now wait for Trump to actually sort of, say what he wants to do as far as tariffs are concerned? So just circling back and tying in the levels here, Nifty is near the 20-day moving average now, 24,567. We left off at about 24,500 yesterday. So about 70, 80 points away is where the 20 days, that's the first hurdle. Above that, the 40-day exponential moving average comes into play. 24,740 is the 40-day. That's the big number. A decisive close above these levels will mean that the Nifty starts to look at retracement levels from the all-time high of September to the recent low. Bank Nifty, the supports are 24,200 and 24,075. These are supports for the Nifty. Bank Nifty inched higher. It's not yet broken the high of 52,577. So that's the first level. And on the way up, the 61.8% retracement for the Nifty Bank is 52,835. Trendline supports come in at about 50,470. I would say the market, I don't think we'll see a continuation of the very sharp moves we've seen over the last 2 days. A little bit of consolidation after the tremendous run that we've had. I think that is due today and maybe over the next couple of days as markets really wait for what we will hear from Trump. There is the FOMC. It's relegated to the back seat, but I think that is still important, and we still got this China thing to wait and watch out for. Earnings are coming through, and that is also a reminder at the back of one's mind that there is a bit of a slowdown as far as earnings growth is concerned. GIFT Nifty will come up on your screen, should give you an indication. It's about 100 points lower on the GIFT Nifty. Surabhi.
Yeah, absolutely, Prashant. That's a comprehensive wrap. So just to add, yesterday in terms of the trading action, everything was going higher, right? Yep. Almost all parts of the US market, but in particular, even legacy auto stocks, the ICE engine makers, even they were going higher because this is so much about make America great again or America's golden age and, Trump will fix it and all of that. So a lot of the legacy industry stocks were also doing really well. Having said that, we all know what happened to Tesla, 16% up. And let's see what that means for EV tariffs as well, and which way policy swings. So that's something we'll watch out for. Bank stocks were trending higher. That's what happened. And by the way, the crypto move is still on this morning. A lot of the cryptocurrencies are still tracking green. Over the last 24 hours, the gains have been anywhere between 5% to 16% on things like the Dogecoin. And obviously, you've got the Bitcoin above $76,000. So when we stopped trading yesterday, it was $75,000. Now it's $76,000. So this is how the money is moving. There is flow of money even in the crypto market. And we'll see what that means for an emerging market like us. By the way, beyond the U.S. Federal Reserve, where, of course, the expectation is that 25 basis points rate cut, there's the Bank of England today. And the BOE is also expected to cut rates by about 25 basis points. So let's see what the central bankers start telling us over the next 24 hours or so. In Asia, it's a very interesting reaction. In some of the Asian markets, it started a bit negative, but that's quickly changing. The Nikkei is the only one that's actually down about 0.6% right now. But the Chinese markets have recovered. Hong Kong is up almost 1%. Singapore is higher. So Asia is a nice shade of green as well, barring Japan. And let's see if we actually are going to be in sync with that, because it was the second day of gains for our market yesterday. The Nifty has recovered a little over 800 points from the consolidation low of around 23,800. From that zone, we've galloped back 800 points. The question is this the real thing? Is it a durable move? Have we put in a durable bottom? If you're looking at the FPI numbers, well, it'll make you a little edgy because that FPI selling still continued. There was no change there. About 4,400 crores of selling once again. Domestic institutions offset that very nicely by almost 5,000 crores of buying. But the whole question on flows and foreign flows, that's very much still open in the air, and we have no answers. I think we just have to wait for the global trade to settle. Talking about some of the earnings, as Prashant said, earnings are in focus as well. Tata Steel, Nigel tells us that at least operationally, the performance looks good thanks to the India business, and we'll get to it in a bit. Apollo Hospitals was a good number. Top line growth was quite good. Margins expanded. So let's see how Apollo reacts. Blue Star also fairly steady. 20% top line growth. Margins were in line. We don't have too many howlers. Today's a big day for earnings, by the way. And I'll leave you with the stocks on the board. M&M, Lupin, a couple of consumer names like Trent would be reporting. Imami, Indian Hotels, and then a couple of interesting PSUs like NHPC, Cochin Shipyard. Remember, Masgao Dock's performance was really good. So can some of the other PSUs put in that decent show as well? We'll watch for it. But I think it's going to be a bit of a mix of the global trade, making sense of the whole Trump move, and also local earnings today.
You know, on the Bitcoin move, there was a note that came out from Samco Securities, and they said that there is a correlation between what the the cryptocurrency world does with the Indian markets as well. It shows some risk appetite. And on the graph, at least, it looked like there was some correlation. So let's see how that goes. Now, Trump has delivered, because that's what the equity markets were factoring in. But will the Fed deliver what the markets want? That's the cue for later tonight. And Trump, as we know, is going to be good for the U.S. markets and U.S. economy. But what about the rest of the globe? Because yields moved up, the dollar index as well. That's firm. Which brings us to the bounce that we saw on the Nifty. Was it a dead cat bounce, or is there more in store? So that makes today's session extremely important. What about the FI action? They continue to sell. They sold close to 4,500 crores in trade yesterday. The shorts are still not covered on index futures. Though if you look at the stock futures, well, the long positions are at multi-month highs at around 11 lakh contracts or thereabouts. So that's how the FIs are positioned. On the index futures itself, you have close to around 75% of the positioning, 74% of the positioning on the short side. And as we've been saying, the clients as well as the FIs, they are at opposite ends of the spectrum. Moving to the levels that we'll be looking at very, very closely then. Going by the options data, going by the recent resistance levels, the 20 DMA, that becomes very, very important. If you can get past that, we need to get past the 24,550 mark. Then the bulls will have their eye on the 25,000 odd mark. Near term though, support comes in at around the 24,000 odd mark. We're going to be starting off in the green. Going by the last couple of trading sessions, the bulls will like to believe that we can recover from the low point of the day. The Nifty Bank. Yesterday, that was plagued by that selling that we saw by the FIs, and also it played out the weekly expiry in trade yesterday. So that index needs to perform today, and the bulls will say that this one holds the key for the day. The resistance comes in a few hundred points higher than these levels, close to around 52,600, 52,800 odd, while you have support and crucial technical levels at around 51,500. And HDFC Bank will have to play its role. You have the MSCI announcement that came in overnight. The expected inflow is around $2 billion odd, which is nearly around 6.5 times the average daily volume. So that's going to be the stock that's going to be in focus for today's trade. Remember, this is with regard to the free float adjustment that was due. The other one is Reliance Industries. That seems to be trying to bounce back. And now it's very, very close to its 20 DMA, which comes in at around 1,350. If this one that's been underperforming of late, if it can get past this level, then you'll have both those engines firing, HDFC Bank as well as Reliance Industries. So we start off in the red, but I think that dip gets bought into at some point of time.
Well, the global setup is definitely still very, very positive. So let's see if the bulls manage to make a hat trick today. Let's move on with the equity call of the morning. We have Alexander Redmond of CLSA listing out some points to consider for regional equities with Donald Trump's return to the White House. First, how the Trump campaign proposed further cuts to U.S. corporate taxes will impact the EM versus DM EPS growth differential and thus relative performance. Second, he says the disruption to growth and earnings from the implementation of a punitive tariff schedule. Third, Alexander adds how Trump's agenda may prove inflationary, impending Fed and regional central bank monetary easing, supporting the US dollar, and finally, geopolitical concerns from Trump's isolationist foreign agenda. So lots to watch out as the first couple of weeks of Trump's presidency begin.